Hello, I'm Donald Leggett and welcome to Share Views, brought to you by London South East. My guest today is Keith Bush, Chief Executive of Cabot Energy, who have just announced a transformational deal involving their principal Canadian assets. Welcome, Keith.
Morning, Donald.
You've been a busy boy.
Yes, we have. It's been a pretty busy time over the last few months, but it's been very good, actually. We've had a very good result.
So, two major announcements yesterday. Let's take them separately. Let's unravel them, starting with the acquisition of the remaining 25% of the Canadian assets which you own. Now, you've bought that from H2P. What exactly are you buying from H2P?
So, effectively, we own 75% of the assets already. H2P, who are our partner, also a shareholder in the company, they came on board last year and invested in the assets. And what we've done and what we've learned over this year is that the real value of the assets is in being able to drive them forward in the way that we want to. So having 100% ownership of them is actually quite important. And I think for H2P it worked for them as well, because they've understood that actually being an operating partner was something that taken on board more than they could deal with at the time. So it was quite a good transaction that we did.
And H2P, interestingly enough, actually have a major company backing them called iPulse. Now, explain to me who actually owns who iPulse are and why that's significant.
So iPulse are a privately owned company. They're $1 billion plus. They're a huge company, and they have several subsidiaries, H2P being one of them. And they're a very technology-focused company. They have a very specific way of channeling power and releasing it in a very short period of time, which gives enormously high power pulses. This has applications in various different industries, one of them being oil and gas. They also work in mining, they work in manufacturing. And so it's something that they're pushing forward very much. H2P are a subsidiary, they're an oil and gas subsidiary, and originally they got involved in order to promote the technology. It's a technology called Blue Spark. But they're now actually forming an E&P company where they're investing in 3 and 4 smaller companies, and they want to take forward and they really want to grow with those companies. So to have H2P and hence iPulse on board with us is actually a great place to be, because we can also leverage their technology, but we can also leverage the ability and the knowledge that the people have in the senior part of iPulse. And it's, I've met the people that are involved there, and they are very, very good.
So you have a well-funded parent company. That's a majority shareholder. That's a very useful thing.
Yeah, it is indeed.
Great. So why is it better to control 100% Rainbow and Virgo than operate with a partner to share the costs and the risks? In theory, sharing costs and risks is a sound principle, isn't it?
It is, but I think we've done a lot this year and over the last couple of years to de-risk the project and de-risk the potential development that we have. From our perspective, H2P had an option to take another 25%, which would have meant we've gone to 50%. We're effectively would have been down to 500 barrels a day, and it would have been almost like starting again. So we didn't want to do that. We want to grow the production base of the company. It's all about generating that cash flow so that we can then reinvest in assets to grow the production base. H2P are more interested in just being an investor rather than being an operating partner. So they want to invest at the corporate level rather than at the asset level. And they want exposure to the whole company as opposed to just the Canadian assets, because of course we have the Italian piece as well. So
presumably it means they believe in you as a management team, though, which must be a big thumbs up.
Oh, absolutely, and we have a really good relationship with them. I think that they've been very supportive of us this year, and it's been really good to have them on board. And as you say, it's a great thumbs up for the management team. And the Canadian assets going forward, the growth potential that we see in them. And it's not just talking about the 1,000 barrels a day that will be at the end of this year, it's doubling that to next year, but then it's the growth beyond that to 3,000 to 5,000 barrels a day over the next 2 to 3 years. And that's
big players want big returns, presumably.
Yeah, and if you look at the sort of balance sheet of iPulse and subsequently H2P, is 5,000 barrels a day enough for them in the future? I don't think so, and it's really exciting for us to see where we could get to.
I can see the potential. So H2P UK have been paid mainly in shares and with a deferred cash consideration.
Yeah.
So what's the price, and how did you actually work out what that price would be?
So it's $8.7 million. We worked out that price through the evaluation of the assets as they exist today. We have an independent reserve auditor in Canada called McDaniel and Associates, and they did an audit at the end of September that effectively valued the proven reserves at a price of around $25 million. with 50% of that, which is effectively what we're valuing the H2P value at, plus minus the 4 million that they would have needed to pay us for the 25% option, we came down at the 8.71 million. It's quite a complex way to get down there, but ultimately we're related to the proven reserves, and the asset as a result has the potential to grow much beyond the proven reserves because they're significantly lower than we'd expect to produce over the lifetime of the field.
Was it a difficult negotiation?
Yeah, they wanted higher, and we had a long conversation about it. We actually took them through the metrics of deals that were done in Canada, and generally they're done at the proven reserve level. I think if you step out of the North American space and into more international deals, they tend to go towards the proven plus probable reserves, which is higher value. But I think we were very much working within the confines of the Canadian market, and I think there was a very fair deal for both us and H2P.
The big question is, what's the commercial rationale for the deal? Why not just slowly develop the assets?
Well, because we've done a period of workovers this year. We've drilled one well. We're just completing the next one now, and the real production growth we see is coming from drilling new locations through sidetracks. As I say, we're finishing the second one now. The first one came on fantastically. We would expect the next ones that we're planning next year to do that and really accelerate the production growth. And as I say, we don't want to be a company that's just growing from 300 to 500 to 700 each year. We want to double production next year, and we want to do the same the following year. And it's a case of really accelerating the growth of the assets and taking control of them and generating that free cash flow that we can do other things with.
The other big part of the announcement was that Cabot are hoping to raise up to £12 million through a subscription, placing and open offer at a price of 5 pence per ordinary share. So break down that for us in simple terms, if you might. Okay, so High Power Petroleum are investing about 9 million in the subscription. We're doing a placing with existing and new shareholders for 1.4 million. And that's institutions?
And that's institutions, exactly. And those are subject to shareholder vote. And then beyond that, we've got an open offer for our remaining existing shareholders, because we would really like them to come on board at this level and be able to not be diluted too much, because I think the shareholders have had suffered through the market as the company has, and now they have the opportunity to really benefit from the value growth we're going to see over the next few years.
But one of your institutions are going to go into that open offer as well, though, aren't they?
That's right, yeah. Cavendish are going to go into the open offer, and that gives them the opportunity to vote in the general meeting, and they're very positive about the move. In the placing, City Financial are involved in that, and again they're very positive about the move. So the three institutions we've got see where the company is going to go, and they see the value of the deal. So, as I say, I think for the private investor, we'd also like them to do that as well, because the company is going to go through a period of growth.
Okay, let's focus on the private investor. What's in it for them? What's the investment case? They're going to get their shares diluted. Why is that actually a good thing in the long term?
So ultimately, with the investment capital that we're getting, it gives us the opportunity to drill 10 sidetracks next year, to double the production, and very shortly into 2019, where we have quite an ambitious program in our 5-year plan to grow the production to 3,000 to 5,000 barrels a day, and the investment required is generated by this fundraise. So the point being that once we've done this, once we've drilled the wells next year, we have so much free cash flow going that we can fund the activities for 2019 and beyond that. And it makes absolute sense now for people to really get behind it. I think from a growth plan, we have a very clearly worked out program of production growth where we're generating clear cash flow, and this isn't an exploration program or a potential development or something like that. This is real. The oil's been discovered. There's no doubt about that. It's low risk, so it would really be good for people to be involved.
And what will this mean for the medium term share price?
Well, I think we're going to see what happens to it. I mean, I think all we can do, we can't control the share price. What we can do is we can do what we say we're going to do, and we've done that this year. We've got to the 800 to 1,000 barrels a day exit rate that we said we were going to do. We want to double that for next year, And if we do what we say we're going to do next year, we'll have significant free cash flow for the company. And then beyond that, we'll talk more about where we get to once we've had some results from the drilling programme next year.
What difference does this make for the company, for Cabot, in the short to medium term? And how does it provide a platform for your longer term ambitions?
So I think from a short to medium term, it gives us we're much more than covering the cost of the company now. We're far beyond that. We're now looking at the ability to generate that free cash flow, to invest in other acquisition opportunities, and the industry's still trying to recover from the downturn of the last few years. And so there are opportunities out there in Canada and elsewhere, and Italy and other regions to be able to invest money to grow that production base. So it gives us the ability to do that. At some point, debt would become available, and bear in mind the company has no debt. So we're very clear on that front, and we'll be able to really grow a significant production base, and you go a few years down the line, and potentially we become a dividend-paying company. That's something that we've talked about at a board level. And of course, we need to invest in the infrastructure and the wells now, but in future times when we've got significant cash flow from this production, who's to say what we're going to do?
What's fascinating is that your shareholders on the London South East chat boards are living in the past.
Yeah.
They still talk about you as if you're Northern Petroleum, and they still talk about you as if you're badly managed and overpaid. So what do you say? What do you say to that?
I mean, I understand that, and I understand what shareholders have been through, and I think that people are entitled to their own opinion. And I would just say, judge us on what we are going to do, what we say we're going to do. I think judge us on that. Don't judge us on what's happened in the past. We're a new company now. It's taken 3 years to get to the point where we are now of really, really hard work, and I would ask investors to have an actual look back at what we've done over those 3 years, and not just look at what the share price is doing, because it's been the same for all oil and gas companies over that period.
What you're saying is you've not talked, you've delivered.
We've delivered, and I think that we've taken the opportunities that arose for us, and we've turned them round, and we've actually done something from it. And I think that we will continue to do what we say we're going to do, and investors can judge us on that.
Okay, so now that you've actually changed the minds of those folks who've got a Northern Petroleum mindset, what should shareholders do next?
I think that the shareholders are going to get through their open offer letters. I think that they should have take a view on the plan that we've put forward in terms of growing the production for next year. As I say, we aim to drill 10 sidetrack wells, and we expect those to do between 100 150 barrels a day each when they come on, and we expect to grow production to 1,600 to 2,000 barrels a day next year. And that's net to the company. That will, there's significant free cash flow there. They should take that view on the business plan, and they should, if they feel that they want to invest in it, then they should do, because I think that there's going to be significant growth over the next few years.
So they should be coming in alongside iPulse. They should be coming in alongside 2 or 3 institutional.
Yeah, Cavendish and City Financial, and those are strong institutions. They've got big balance sheets, and they're there, and they've shown their support over the years. They believe in the management team. They understand what we've been trying to do over the last few years. And iPulse are an extremely technical company. They've not looked and thought, well, we'll just have a punt on this. They've done their due diligence, and they've been all over us. And I think that that's something that people need to understand. This is not just a whim that they're working on. They've gone through some serious work to understand what we're doing, and they're investing. And your interests are aligned with the interests of the private investor? Oh, absolutely. I mean, if you think that a guy like Robert Friedland is going to come on board for a company like us and expect not to make any return out of it, then you're crazy. And they want a return on it, and as they get a return, so will the private investor. I'm going to have to stop you there, Keith. Thank you very much for coming in and explaining your transformational deal. All sounds fascinating, and thanks as ever to you for watching.